All right, hey everyone. I'm excited today to have Tyler Harridge from VRA Insider join us. Tyler, good to have you here.
Hey, John. Thank you. Great to be here with you. Been loving the show as well. So very grateful to join you here today.
Oh, thanks. So we met the first time at FMS this past year. Do you want to give everyone kind of an overview of VRA Insider, what the business is, and what you guys do?
Absolutely. I'll take a quick step back there because I've loved FMS, and first and foremost wanted to say thank you for the fantastic network that you've built there and the phenomenal people you've put together from this industry. When I got started with the Vertical Research Advisory, that's the name of our company. So VRA is Vertical Research Advisory. It was founded by my dad in 2003. I joined him 9 years ago now. And as I was getting into the industry, kind of getting my feet wet, learning really what financial publishing was even about. Because I think it flies under the radar of so many people, even though it's what my dad was doing at the time. And I got connected with Chris Daigle, who recommended me over to FMS, and you as well. So, shout out to Dr. Daigle for that. But really, FMS helped expose me so much to what is possible in this space and how many companies approach this industry with completely different mindsets. I love that about it. So I'll dive in a little bit more in a second to VRA for sure. And hopefully, I think we're kind of one of those as well. We have a unique selling proposition that has defined a niche for us, and maybe for some other smaller publishers out there, and medium and large ones as well, might be able to take something from what we're doing and apply it to their system as well.
Cool, cool. Well, I appreciate that. Yeah, no, it's great. It's a great community, and it is, like you said, it's gotten more attention in recent years as kind of the broadly newsletter marketing has gained more momentum.
Mm-hmm.
But we've been a out of the way part of the internet for so long, and
Right.
even in the direct mail days, even. Uh,
Yes. And that's what I really love and have grown to love about this industry. And again, I mean, going back through some of your older YouTube videos there for some phenomenal people, whether it's options trading, prediction markets, private equity. I mean, there's so many different ways you can approach this space. So I guess a little bit more background might help though. So my dad, like I said, Kip Heritage founded the VRA in 2003 after he spent 15 years on Wall Street, took 7 companies public and helped raise, hundreds of millions of dollars for those companies. Left Wall Street, got out just ahead of the dot-com bubble. And that's when I started seeing a lot more of my dad at home too. But when he kind of went on the entrepreneurial route and started VRA. So, yes, I joined 9 years ago, but this really is a family business. It's what we talked about at the kitchen table growing up. My younger brother just joined the team here as well, just about 7 to 8 months ago. My mom works here, and as she would say, don't forget her other son, which is our other guy, Josh, here. So it really is a family business. And this is what we love. It's what we love talking about it at home. From the trading side to finding new companies, economic research, it really is what we're passionate about. So it almost seems surreal some days that we get paid to do it too. But that's what we're here for. We want to help people make money. We want to help retail investors make money. That's our primary audience here, helping the mom and pops really, because there's never been a better time to be a retail investor than
yeah,
today.
for
And I
sure.
think there's so many opportunities that they don't even know that they have access to. So to be able to bring those to people and see the effects for them in their financial future, their
Hmm.
retirement accounts is such a rewarding
Yeah,
experience.
that's cool. What are the kind of the product lines that you have?
Mm-hmm. It's a great question because we're probably, like I said, a little bit smaller on the product line side. So our primary product is our VRA letter, is what we
Hmm.
call it. So in there, we have anywhere from 12 to 15 holdings at one time. And we've got everything on our website backed up, going back to 2003, every trade, every update, which is also, I think, pretty unique because over the last 3 years, sorry, I gotta give you one more shout out here for Chris Daigle too and FMS. Without FMS, Kip and I, my dad, would not have published our book that's over here, The Big Bribe. Chris was a big part of that. And So I had to give it another shout out there.
Nice.
But seriously, without y'all, it wouldn't have been possible. So thank you again. Um, but in 2022, we called the bear market lows in October. We published that book about 1 month before. And so since then, we've outperformed the market each of those years, average returns of over 37% on our portfolio with some really big winners in there as well. So it's been a phenomenal run here. So that's our main product with VRA. And I could probably elaborate. I feel like I'm rushing through it here a little bit. I could
No,
elaborate
that's
a little
fine. I
more.
mean, for
Mhm.
like the kind of the rest of the industry's purposes,
Mhm.
it's like, what's the general outline of your products? You don't
Mhm.
need to like give it the detail you would give a customer.
Mhm. Absolutely. So you get a daily update is what we do every day. The market's up open. Our subscribers will receive an update. We also have our free podcast after the close. We do that every day as well. We're at about 2,000 episodes now. Kip and I alternate days. Um, that's also a fun part of the day. We have our options program. So we call it our parabolic options program, which is in, let's see here. I think we're in our 25th program now. And we're just about to add an ETF product as well. That'll be called Vertical ETF. So that website should be up now. We're, just kind of taking, some pre-subscribers there, and that'll be launched here pretty soon. So,
Nice.
like I said, smaller on that size, but we run it lean and mean here. Our team is small, and we're really hands on as well. That's another thing for our clients that we take a lot of pride in is getting back to emails and things like that really quickly and giving that where we can. Right, of course, there's the compliance rules always,
Mm,
but where we can, getting back and providing feedback, or even, hey, maybe I can't answer this in a one-on-one. I can address it in a public forum.
right.
Really trying to be there and help so many, like I said, retail investors to be able to succeed in this market. Because if one person has the question, probably about 15 others do as well.
Yeah,
So,
for sure, for
mhm.
sure. That's cool. I mean, 2003, like kind of one of the old at this point one of the old businesses in the in space. You know what I mean? Like one of the legacy
Mhm.
businesses. That's a phenomenal run, and then to have that in back issues and be able to go back and show like this is everything that we have for that long, I'm sure is pretty cool for some types of customers. I mean, that means a lot.
Mhm.
And
And
I think,
even for me there, I got to say to my dad as well, has been a phenomenal mentor in that regard.
yeah,
Where I thought the business was one thing, like I said, we talked about it at the kitchen table every night, but from my background of so just really quickly, went to college here in Texas. I'm in Austin, Texas at
mhm,
Southwestern. Played baseball there for all 4 years and started my first business there at the time. And I was in resource recovery, so far away from financial space. But that really got my feet wet into the marketing side of the business and the day to day side of running a business and being an entrepreneur. Um, so kind of again, I came into it with the marketing experience, and man, I had no clue what I was in for.
yeah. No, it's definitely I don't know, marketing lifestyle. Um, but so you guys have been running around for two. I think about your story, and I kind of can't help but think of Martin Weiss from Rice Research, right? Because his dad um, started what in the 50s, 1950s, print newsletter.
Mhm.
And he remember him telling me that when he was in college, he was mailing 1 million direct mail pieces a month or something out of his dorm room. Like,
Wow.
I mean, he was managing it from his dorm room, right?
Mhm.
So he was like, same thing, like came up in the business, and he's been in the business over 50 years. Like a
Yes.
phenomenal. So it's really cool to see that kind of generational thing. And I know we've got a lot of other folks like that. Obviously, Jules Bonner's taken over at Agora lately.
Mhm.
Um, Morgan Busby from Financial Media Corps. His dad is
Fantastic.
Tom Busby from
Mhm.
DTI, who I think started in the 70s. So it's really cool to see this kind of like multi generational aspect of the industry um, in so many different places at this point, right? Like it's
Mhm.
pretty cool. So that's a cool thing to hear from you guys. And so I guess like what I'd be curious now is, you know, you've done things differently from when we talked before than a lot of folks. Your acquisition and marketing was not what I think people would think of initially, right?
Hmm.
You want to kind of talk through what kind of channels and things that you started with and you guys are working on?
Absolutely. And I'm sure that there are plenty of people out there who would or might hear this and think, oh, you could probably optimize these three or four things. So I'd love to hear from you about it. But I do think it is a little unique, and we had touched on it briefly as well, where we've really found an underserved audience here, and that is in the old media. So we were talking about mailing before. I'd be interested in doing that because of the success we've had in other forms of media, whether it's radio has been phenomenal actually for us, and TV as well, especially the smaller networks though, because in our view, at least, where we've kind of boiled it down to is that if you're on a smaller network, the audience is really engaged, especially if it's not on a traditional cable package. It's not on YouTube TV or one of those. Then someone has to download an app or very specifically go to the website. They're there very intentionally, I
Right.
guess, is the point. And they've been so underserved. If you hear those
Hmm.
commercials, especially if you're in the financial space, you'll know what I'm talking about. It's all gold, right? Gold or gold IRA, retirement, annuities, these kinds of financial products.
Hmm.
So we've found that we do fit that. There's a huge need and want for a product like a financial newsletter in that audience. So that surprises, and I do get a lot of surprised looks when I mention that to people
Yeah.
too. But you know, it's also again to the engagement of the audience. That's one thing kind of I mentioned earlier of really taking care of our clients. Like you said, I mean, father son team. I'm very grateful to be a second generation now financial publisher, and we're also fifth and sixth generation Texans too. So that trust and reputation means a lot to us. You know, you only get one of those for sure. So with that audience, we've built a very engaged list for a long time, which is so cool. I was just talking to some more of our clients earlier this week, and found out we were talking, we talked pretty regularly, become a really good friend. And he was asking me something about his account, and I happened to go check. And he had been with us as a member. It was like 2 months before I even joined the VRA. That kind of engagement and lifetime customers on that level, I mean, you can't replace that.
Yeah.
Um, and I think that's where a lot of that audience is too.
Yeah. Why do you think? What do you think it is that you have such a good retention rate with these customers?
I definitely, it's all comes from the top down. My dad has done a phenomenal job of from the day that I got in the business and even before, as I was, going on my own entrepreneurial path. It sounds cliche of the customer always being right, but when you really treat people that way, or especially when you're dealing with finances, right?
Hmm.
Money can be so emotional for so many people. So if you get an angry email or sarcastic or anyway, just really understand where people are coming from, that it is an emotional topic, and trying to handle it as best that you can, which is much easier said than done for sure. But I think that kind of attention and care has really, really helped that a
Hmm.
lot. Because it's surprising. So you get an angry email or something and respond with kindness. You create a lifelong client through things like that. They may come back
So
3 months, six
well, I
months, a
think
year later, but yeah.
first and foremost, like you're giving a lot, then you're responding a lot to the customer service stuff yourselves.
Mhm. Yes, ourselves exactly. And we, like I said, it's a small team too, so we do have a
Hmm.
client, specifically that side of the team for
Right.
his basics of password, that kind of deal. But yeah, we like to. So we do monthly webinars as well with our people to try and
Hmm.
keep them. We love our community here, and we do events from time to time as well. We worked on a project. Maybe we'll touch on here in a little bit, but a private deal, which was a little bit on the newer side for us. So having that opportunity to get out and face to face, shake hands with people is always fantastic.
Yeah. Yeah. That's great. So I think that we talked about that at FMS a couple of years back about the kind of how and we'll see how well this pulled through. But there was a churn and burn era
Hmm.
in the industry, right? To a degree, because there's so much traffic and volume available that you could go after it, and it would
Hmm.
just keep refilling, and that maybe we've moved it away from that era to where like it's long-term relationship, it's building depth with the customer, and
Hmm.
keeping customers longer, which I think, I mean, I prefer that type of publishing, but I recognize that that's not the only type of publishing, and
Right.
the other version can make a lot of money for
Hmm.
sure, and
Oh,
has.
and provide great value to people
Yeah.
as well. I mean, there's so many phenomenal newsletters out there, and that's, I guess,
Hmm.
kind of our niche is that smaller market of the personalized care. But there's so much value in the research with people who have huge audiences out there too. So there's so many ways to go about this industry,
Hmm.
and that's really one thing I found so encouraging too. Whether it's somebody's first time at FMS or brand new to this space, and maybe they don't like where they're at or the research they're doing or the product they're working on, well, there's 100 others, right? If you don't see it out there, I bet there's other people like you who would like that product too.
Hmm.
So there's so much room in this space. I think even for newsletters, people talk about how saturated it is, if it's Substack, or I don't think we're anywhere near a level of saturation to be worried
No,
about.
because yeah, I think the my view is that the quote unquote saturation is more of like, it's really more of a quality issue, not a, right. There's a quantity, like there's a lot of people
Mhm.
who put out newsletters in any industry, um, that are just kind of like generic, and they're not that great, and they don't really put a lot of effort into it, and it's like, yeah, those aren't that great. People
Mhm.
don't read them as well, and there is a like there is a volume problem if you're a reader in this space. Like I have a Gmail account that used to be my main Gmail account, and it's like I lose things because I can't get
Yes.
off lists, right? And I have so much stuff going there at this point from God knows where. um,
Right. No, that is true.
right. But once you have someone's attention, if you
Mhm.
can build a relationship and hold it, then there's no problem, because like I have this too. Like I'll search for certain people's e-letters, make sure I check it out, or have a new email address, make sure that one goes over there.
Right.
And so I think that saturation issue is still, it's eternally in every form of advertising, right? That
Mhm.
you hit a point where everyone's like, oh, it's saturated, and then it's like it's maybe ubiquitous. Um, Lots of people do it, but
Mhm.
the real core issue is that the format itself no longer gives you the attention, and so the content and relationship has to give you the attention. Whereas in the early days, like I remember the early parts of the internet, for instance, like back back when your dad was starting the business, um, that just having an email list, um, people would read like, oh, I got
Mhm.
this email, I got to read it, right? Like,
Yes, that's where
and
all
so
everybody's attention was.
right,
Absolutely.
so the format in the early parts of format gives you more attention, and
Mhm.
then as that format becomes more used and less interesting, then you have to, like, it's the content, right, that matters, and so that part never goes away in the relationship. And so, but
Right.
the yeah, but just the fact that someone give you your email address, that by itself no longer is like super exciting to them. Hey, you sent me an email, great, but oh no, I
Right.
like this guy's email, right?
Right. I mean, how many times a day do we all put our emails in for something that, really we weren't that interested in, but oh, maybe I'll check it out later, and then you see that email, completely forget
Mm-hmm.
what it was. Um, is there are well, not necessarily just for products too, but on the marketing side of it, there are so many different ways to go about it. But such a common one is the fear method,
Mm-hmm.
which I think can build a huge list really quickly. But now, how engaged will it be? Right? Are they really buyers? Um, and at the end of the day, if you're going with the fear method, are you still making your clients money?
Mm-hmm.
That's all that matters, right? At the end of the day.
Right.
So I think there's a lot of people who just want to build a list, right? And that, like you said, though, that's going to be every newsletter
Yeah.
space for sure.
Right.
You can't ever
Right.
avoid that. But you do need to, for somebody who's newer to the space, you kind of there is a decision to be made there, I think.
Mm-hmm. Yeah, for sure. And I want to go back actually to your radio
Mhm.
advertising, and just curious, just in terms of process, are you like, what's the call to action on that?
Mhm. So we've done multiple, and that's a great question there because we have tried multiple of them, and over the years, hands down, it's not even close. There isn't even a close second. It's the free trial. So we do a 14-day free trial on the website VRA Insider. If anybody wants to see what that landing page looks like, or if there's any other questions too, anybody could reach out, support at VRA Insider. We'll keep it easy. But it's a simple landing page there. And like I said, we tried other offers, discounts, but it's such a people haven't heard if they haven't heard of you before, the free trial. And we also are. We've been around since 2003, so I guess it's a bit of a luxury to have this, but we really trust in our product. It's all based off of our VRA investing system. So everything that we have to offer, we give away for free. They can download it, do whatever you want with it, all the updates, our full portfolio going back all the way. So it's a great introductory point. And honestly, for me as a consumer, I really like those kind of, for a newsletter, I like that as well.
So are you just, so when, I guess, then again, logistical question here. They're getting the offer is a free trial, and you're driving them to a URL, or is it to the homepage? Is it to, like, you just put the offer on the landing? Like, how do you tell them to get to the place where they can get the free trial off the radio?
That's exactly. So that has always been a problem, is the tracking, right? And now thankfully tracking has come so far that it went reverse. Not who's coming from the radio shows, it's how do we tell where everybody else is coming from? And then kind of by process of elimination, that's where we can attribute those leads to a little bit. So there is definitely, it's not perfect data sets from that. But over time, like I said, so we do have our main website, which is separate from this landing page. So it's purely only people who see that radio show go to that domain.
I got you. Okay. So it's domain specific. Okay,
yes.
Yeah, that makes sense.
We also, we try, like, our website's VRA Insider. You try it, VRAinsider.com/FMS. Well, some people might go to the website, but they're never going to use the slash, really.
Right. Yeah, absolutely. Okay. No, I was just curious about what your process was there.
Yeah, and I would love to hear if you had any other ways of doing it too. I'm always trying to find the best ways. I'm definitely not saying these are how it's done.
We don't have a lot of people doing radio. We do have some doing TV, and I don't remember what they're doing. I have to ask. But it is interesting that you're using those as kind of dominant media for your acquisition. I was talking to, I don't know if you ever heard of him. There's a wonderful publisher. He's been in the industry forever, named Lee Bellinger. He's a copywriter and everything else. Just the other day.
Absolutely.
Yeah, so I was talking to him yesterday, and he was talking about, he's run a newsletter for forever, and the LTV difference, lifetime value difference on his direct mail customers versus his email customers, and he's like, it's not even in the same ballpark, right?
Really?
And so there is something about, like, we give up but there's the ease of media, and I think your point earlier about, hey, there's people who are in a particular media that, in a very intentional way, and that's I think something that it's a really big point, that they're in engaging. People who do engage from offline things are really engaged.
Yes.
And I know the direct mail, I've been saying direct mail for a while, is it didn't go away. It went away in our industry largely as, email acquisition was cheaper.
And the speed of data too.
Speed of data. Absolutely. And the tracking, the cost difference now is, I don't think, the same. We don't have the same. You don't have the huge cost advantage online that you used to have. Right.
If anything, it's probably going the other direction now. Yeah.
Right, exactly. And the mail is cheaper. It's just that you don't have the list universes to go rent the names to scale. So there's a scale problem in the mail. I think that there's, I've been saying this repeatedly. I think that there's a big opportunity to mail your house file, your customers' house file. I'm aging myself right there. Like, people don't like.
I know what you mean, though. Yes. Yeah.
It's your list. It's the list that you own of customers. In direct mail those people for back end offers. I think that's a huge opportunity, just more revenue. And then I do think that I would love to see more people who are testing and trying acquisition things. It's a great place to do affiliate pushes if you can find it, if you track it well,
Hmm.
with other folks, and so there's a lot there. I think the offline model will increase. And one of my touch point stories, I love this story, is a friend of mine works at a big data marketing data company for all kinds of like mainstream retail brands. And
Hmm.
he was telling me a few years ago how a lot of these brands, like he used Warby Parker as one of the examples. Maybe got up to about 50 million in sales from mostly meta spending at the time. And then,
On Meta, yeah.
yeah, right. And
Hmm.
then they hit a point where they were like, the cost to acquire a customer is actually less if we build a brick and mortar store. And so you had all these brands, these personal kind of consumer product brands that started online and then built
Yes.
physical retail presences, right? And so they went back to brick and mortar they didn't stop the one, but then they started to integrate those things. And so like the cost to acquire a customer, the difference has been gone, right? I say that
Mhm.
in the 90s, I think it was, $100 to $130 to acquire a customer in direct mail. Um, Now we have periods where people are paying $200 to $300 to acquire a customer. Periods where it's lower too, but it's much more on par. And it's just that just like with TV and radio, we maybe don't have the same we don't have the same audience that you used to have, or rather, the technology shifted so the audience is more segmented. Maybe is a better way to say it. Um,
Mhm.
and so we lost the kind of list broker universe um,
Right.
that the direct mail business is driven on, and that media piece is key. Which, hey, great business opportunity for someone to go out there and put together a list business, direct mail business.
Yes. Or whoever's
I,
in it still. If you're
yeah.
held out this long, you're probably got a boom time coming
Mm-hmm.
here. I put it in my notes as soon as you said it too to spend some more time on that because I completely agree that that's such an intentional audience, and it is so nice to have something physical, that
Mm-hmm.
came in from the mail. If they'd like to engage
Mm-hmm.
with that kind of that's their medium, they love snail mail, then great. They're probably being
Yeah.
underserved, really.
Yeah. And then I think it's also the thing about the mail that you can. And I started in direct mail, so I have a. It was a brief period, but it was still a period. Um, you can surprise and delight the customer in direct mail, right?
Hmm.
You can send things that are interesting and unique, by by how they look and how they feel,
Yes.
and that can be really engaging, in ways. And people would save. So I can't. I grew up in a house of a multi buyer. My mom bought like all the boardroom stuff, right? So we had all the magalogs coming in, right? And like she would save the magalogs, right? And I was like, this is just a promo. But it was cool. She'd save it and then she'd, oh, I have to go back and check that. And so like
Yes.
there's a quality to it that you don't have the same. Uh, Obviously, I'm
Right.
very pro email. I don't think email's going away, um,
Yes.
but
But
I
we
just
use
think
all the avenues, I think.
right,
Mhm.
exactly, exactly. So so you talked about that doing that private deal,
Mhm.
and from what I remember, you guys had a really good success with that.
It was. And I kind of just want to wrap on that last point because it's just really quick here. I was thinking about some digital ads actually,
Hmm.
and going back to kind of my marketing foundations, it was like David Ogilvy era. The copywriting, but also the feel of the pictures. And to your point, if you have direct mail, is a texture thing. What is it
Hmm.
printed on? What's in the envelope? Is there something sticking out of there that might, there's so many cool areas there. So anyway, it's just funny. I was flipping through that last week. I was like, man, no one writes like this anymore.
Yeah,
Like this is how can we? There are plenty of great digital ads, but how can we carry that over? Um, so I think that's going to be a
yeah.
fun one, though. I kind of might have to touch up base with you after this to get some ideas.
Yeah, yeah. Like I'm just picturing like the classic Dan Kennedy trash can mailer. If you like, he'd send those little mini trash cans with the letter stuffed in the trash can.
Hey, but you remember it, and we're talking about it now.
100%,
Yeah,
100%.
I love it.
Yeah, yeah.
Yeah, so we did do a really exciting deal to kind of go back to that. Let's see. So it's been a few years now. So The name of the company is Soldier Oil and Gas. It's in Wyoming. The CEO is a guy named Mark Bruner, who's another kind of Texas legend here and landman legend. Has done multiple other projects. And so my dad and Mark, Kip and Mark, go way back. They did a deal in the 90s and more before that. And we've done some since too. But Ultra Petroleum is the kind of the claim to fame that essentially went from a penny stock to over $200 a share after being split adjusted. So $10,000 investment became roughly $13 million if you really held it the whole way through.
Right.
But that's what got kicked off their relationship. And when Mark, he's been kind of saying that this is his swan song. So when he got pitched the idea originally, he called us to come take a look at it and do the due diligence. Funny enough, it's in maybe 60 miles away from where their original project was, Ultra Petroleum. So it really has come full circle. Nice. But so we were the first people out there. We went in from the ground floor. It's 100% a wildcat well. So it's a natural gas and oil field in Wyoming, Jeffrey City, the middle of nowhere. It was an old uranium town, which is why no one had drilled for oil and gas there. So we did the initial due diligence and we decided, hey, let's bring this to our people. It's something that we really hadn't done much of before, and that there's so much opportunity. Another thing about opportunity in this space, from the 2016 Jobs Act, from Reg A's and all the different structures out there for creative fundraising, that someone else could do a much better job of breaking down than me. But so we brought it to our people. That well ended up being successful. We just had a new reserve estimate come in. So again, wildcat well, very risky. But now we just got the reports back with more than roughly 10 trillion cubic feet of natural gas. So it'll make it the largest discovery in the Rocky Mountains of the last 4 decades. So that helped a lot from there. And since then, from our clients and just kind of promoting it, we've helped the company raise more than $70 million along the way. Wow. So kind of, I'll go full circle one more time of, you can have the biggest audience out there and, millions of people subscribe to your list, but this is how much the engagement does matter. Is that compared to a lot of people out there, we probably are on the smaller side. But to be able to go out there and connect people with a project they never would have had the chance to hear about any other way, has been really, really special too.
Yeah, especially with a quality kind of person behind it. Yeah, that's cool. That sounds pretty awesome.
And there's so many quality deals out there, though, that, I mean, I don't know whose names would want to be said on here, so I won't, but that have been connected with from FMS that have helped out on the legal side of it, right? Oh, here's how you should structure this or market this way. I mean, from top to bottom, everyone's going to be at FMS who's involved in that process. So if anybody out there who's looking for a resource, there really is nothing better. So I got to thank you there again. And some here I'm in Austin, Texas. I actually just had dinner a few weeks back with someone who we met at FMS. So I have a trip to go see another group in a few weeks. So
there's Austin's got a few folks, Simple Trading, John Carter and Zach Westfall of Stocks to Trade, and a few other folks out there.
Yeah, if you're ever this way, definitely let us know.
Yeah, no, that's cool. That's cool. So your customers then have good feedback on the deal then? They really like having that because it's not a normal offering for you.
Right. Exactly. It's not a normal offering for us. And it is something, to go back to the research side of things, this is really where the fun comes in. I love the side of doing the due diligence into these kinds of projects and then being able to connect them to our people. Of course, having success with it helps a lot. I think we probably have a lot of subscribers who felt differently if it had been a dry well. But those, you got to do a good job of communicating those risks and doing the best that you can. And really, it is a communication thing. Anytime you got a question, hey, I'm not disappearing on you. I'm still here. Hey, I'm working on this or that. But the feedback has been phenomenal for it, and the appetite for it, I would say as well. A lot of people who want more projects like that, especially as there are more and more of them coming out. And as we get into an IPO market, like we've seen from the Cerebros one, SpaceX coming up and all of the other ones, there's going to be a lot of potential for companies IPOing coming up.
Yeah, no, there's definitely that, and then also just in the resource space, we're obviously in kind of like a super cycle
Yes.
here for resources, and so we expect to see a lot more. Like there was historically there was a whole period of time when like resource stuff was like the main thing, and all kinds of ways to generate income, like with the wells. There's all kinds of stuff that we used to do as an industry that has a lot of newer folks in the industry just don't even know that it existed. But we also know that there's like, I have this old swipe file of direct mail that goes back into the early 90s, and like you can go find stuff in there that like, oh, this is coming back. You're right. Like versions of this, maybe not exactly the same, but versions of this are coming back.
Yes.
And so I think that's like exciting is that, one of the problems with like having to for larger companies that have to scale to a certain point, right, in order to get enough volume, right, they have like this past year we've had tons of SpaceX IPO promos, right? That's the big story. And like, so we've had this consistent trend of not just these types of promos, but I'd say 80% of the promos are like basically big tech trends promos for acquisition, because that's what gets the attention. You're right in the news cycle, you're getting all that, and so that gets it in there. And so a lot of people they're constantly focused on that big tech trend. Obviously AI, huge for good reason.
Yeah. But it is sucking a lot of the oxygen out of the room.
Right. And then you don't get as much attention sometimes on these other things. So like one of the differences with something like a Wildcat well in my mind versus some of these other kind of Reg A or crowdfunding deals is that like, if that well works, right, it's a yes or no kind of question. And if it works, it starts paying out. Right.
Yes.
Whereas some of these other deals you can invest your money in and it could work and still never really pay out.
Right. It could be locked up for a long time, essentially dead money.
Right. And so there's like this variability in things. And I think that like, a lot of younger folks, and this is not I'm not trying to dig or be, I'm just saying that there's a lot of this variability that I know I learned about, and I'm still learning about from all kinds of great relationships and friends in the industry and outside the industry. But if there's nobody looking for it, because they're always focused on tech trends, and you don't see that stuff, and then when a Reg A deal comes along or a private deal comes along, it's like, oh hey, this is just another tech story because that's what we understand. And you're like, those are the ones that you're like,
yeah.
From a private standpoint, was that, especially now, like how many times have you heard a story of a tech startup that 6 months down the road, 8 months down the road, like their AI thing has been given away for free.
Right. Yes. And there is so much, and that's definitely very grateful for that, being here in Texas, that the mining and the energy sector is so big, because it is so overlooked. And the tech stories, which I love as well, they're so exciting and so much fun to follow, especially like SpaceX. I mean, that's the coolest company on the earth right now. But when it comes to investments, you look at stuff like the mining industry, we just blew away every other sector for highest profit margins in these quarterly earnings. Gold was just at $2,000 an ounce 2 years ago. Now we're even at 4,500 or so today, not to mention above 5,000. I mean, these companies are in for a massive repricing to take place. Their break evens are below $2,000 an ounce. And you just don't see that in a whole lot of places, really. So whether it is energy, commodities, I mean, it could be lithium or thorium or uranium, all these different areas that fly under the radar, but really they're such good, they're money makers, not some speculative tech that, like you said, they're going to be giving it away for free. People aren't going to be giving commodities away for free anytime soon.
Right. Yeah. No, there's a lot of exciting stuff there. I do it's not related to FMS, but I do something else for another publisher where I'm interviewing folks around the build out of the supply chain, because I have a lot of relationships there. And I did interview with the guy who was the head of energy transformation at the White House at one point, and like we just did a deep dive on what's happening in the nuclear sector, just that sector, which of course has a mining piece, it has isotopes for biomedical stuff, and just all kinds of stuff. And it's just like there's so much happening
Yes.
across the supply chain that it's super exciting to see. Um, and so yeah, it's like that's to me like the resource angle is kind of where the romance in FinPub comes
Hmm.
from, because newsletters used to be a very romantic, and I don't mean that, yeah, just a very romantic kind of thing where it's like it was these characters who were doing all this exciting, interesting stuff, um, traveling around. It's one of the things that I love about. I had him on the channel, Sven Lawrence, over at Weird,
Oh,
undervalued
yes.
shares, and he does weird shit investing
I love
conference.
that. That was such a fun, exactly. That's a perfect example of whatever your niche is,
Right.
go for it.
Yeah.
That was a
Exactly.
fascinating one.
Yeah. Don't just copy everybody, but like find your spot and
Hmm.
do it the way that you want to do it. And so yeah, um, so I love it. I love resources. I love everything about it, and it's cool to see that that's a thing that's coming back,
Hmm.
or has come back in such a strong way. How do you guys? I guess when you guys think about growing the business, like where's your kind of head on that now? Um,
Hmm.
channels, size, like is it? Some people get in this thing where they're like they pick a random number and they're like, I want to be this big. And
Right.
then other people are like, like we're trying to grow at a certain rate. Or other people approach it as like, this is what we have, this pretty solid, and we're thinking about growth in terms of like maybe we're going to add this channel or that channel, and we're going to see what we can do, or add
Hmm.
this division. Like, how are you thinking about growth, I guess?
Hmm. I love the way you presented that there. That last part kind of really tied it together for me because I would say it is kind of modular in that way that we do have our business that is our core business that we love and we'll continue to market it and we do want to grow. But I do remember early in the industry kind of picking those arbitrary numbers. Oh, I want it to be this size or that. So it is much more thoughtful now and getting the right people in there. And because we do take such a personal care to it, that definitely affects it. But we're absolutely in a growth phase right now. Kind of, I mentioned earlier, adding another product is a big area to kind of serve a different part of the market. It's still
Mm-hmm.
an area that I love. I've been loving. There's so many great ETF products out there as well. Again, that a lot of people don't know about those.
Mm-hmm.
So I'm excited to really bring those to some people. That'll be fun. But mediums, I think, is really the area as far as marketing goes that we want to start expanding. So we've done TV and radio, as we've talked about, and just in the last few years, seeing the tie-in of just retargeting and remarketing to those, because there's plenty of people who might go to the domain but they don't put their email address in. Being able to be in front of them, it does seem like that has helped optimize our
Mm-hmm.
campaigns. Not a game changer, but definitely has increased them. And so with that, expanding to more digital platforms, we're far behind the curve compared to most newsletters out there on that front, which um, hasn't ever been an issue for us. So we want to use it to make the most of what we're doing in the
Mm-hmm.
other spaces. Um, so I think we're kind of in an exciting point right now. Like I said, of we've got our two main core products, adding that third in a few different areas, and seeing how that expansion goes, and what other private deals come on online here, because that's another product that I would love to write for.
Mm-hmm.
Is the research and due diligence is and this is only going to be a hotter space, I think,
Yeah.
along the way. Maybe a little bit harder to productize that if you're only doing one a year, two a year, right?
Mm-hmm.
Um, so haven't fully fleshed that one out, but man, I don't know if that fully answers your question,
No,
but
no,
there's
yeah,
so
that's
many different areas that I get kind of like just to wrap it all up. Our focus is to expand into that new newsletter and keep blocking and tackling essentially for the
mm-hmm.
rest of it.
Yeah, no, I like that. I think that's I definitely think that like when I think, having been in the industry now for so I was only a couple years after your dad. I was in 2005, 2006, somewhere in there. Um, and having talked to so many folks who've built businesses, started ones, shut them down, started other ones, or been running for so long. It's interesting to think about like how people think about growth, right? Because there's always this period where it is like you said, like I want to be this many million, you know,
Mhm.
and then that's not super productive
Right.
because right, and then whenever somebody's talking about the business more modularly, like you are, like, oh, this is a business that's a business, not a not just
Mhm.
a promo factory,
Right.
um, where you're thinking about the customer, taking care of the customer, adding products that fit that aren't going to damage the relationship with existing customers or see in avenues of growth. But it's a very, like you said, blocking and tackling. It's
Mhm.
like you're going to kind of grind out a bigger business, and you can have big hits and big growth with that still. But it is interesting that I think that the mindset that I hear, and I've gone through it myself at different times, like, oh, I want to have this, and you um, and it is that like, no, this is the X number of things that we need to kind of solve next
Mhm.
approach.
I personally like that approach. Like I said, it's definitely not the only way to do it out
Hmm.
there. But when I can kind of break it down like that and set some milestones in there too, so it's not just everything's up in the air
Right.
for it. Oh, there was one point you made there that I thought was so good too. I'm sure it'll come to me in a second. But I mean, adding products that do fit well with your audience too, not just throwing it all up against the wall.
Hmm.
Whether it's promos, right? It could be a lot of feast or famine, which is great. Maybe that's your business model. But if you're in the game longer, it's kind of like the market. You're gonna have a lot smoother of ups and downs if you just stay in it.
Hmm.
Time in the market is
Yeah.
better than timing the market, they say. And I think the same is true for a newsletter business. Just being
Yeah.
around longer, you'll have a phase where, oh man, that kind of went viral to this audience and I got a bunch of people from
Hmm.
it. And then maybe, you go a few months and things kind of level off and then the next thing happens. Um,
Yeah.
and,
Yeah, for sure.
but kind of trusting the process is easier
Hmm.
said than done for that one, for sure.
Yeah. Yeah, for sure.
But
Do you guys, I'm just curious, do you work with affiliates at this point in any direction?
No, we currently do not. We have in the past, and that's another area actually that I would say is very much on our radar right
Hmm.
now. We've loved it in the past. It's great working with people in that regard. So, and there's so many new tools out there for affiliates that,
Yeah.
and that's an area I definitely could spend some more time on
Hmm.
digging into.
Yeah. Yeah, well, tons of people in the industry that are always looking for relationships. Happy to make connections for you or anyone who's listening. Um,
And
if you can make
you're
it,
the best at it.
oh
Seriously.
no, I'm volatile. I'm like super useful, and then I disappear for weeks at a time. So, um,
You got to keep it exclusive.
that's right. That's right. We
No,
are doing.
seriously, you've always been fantastic. I can't thank
Thanks.
you enough. And
Thanks.
I am gonna that both the direct mail and affiliates follow up with you after this. And um,
Yeah.
I know I had
Oh,
one
yeah.
other
If
thing
if you can make it, I'm telling you, like you're welcome. We have our FMS Pro thing that we do the Market Beat. So Matt Paulson and Will Bushy at Market Beat are going to host us at their offices in Sioux Falls in July, and then Richard Rentrup is going to host us at his offices in
there.
Bonn, Germany, in October. And they're both fantastic publishers,
Man, yes.
and we usually get good crews to show up at these things, and so great place. Kind of like FMS is the big thing, and then we have these meetings where it's a great place to kind of connect with diehards
Mhm.
and people who are doing stuff there. So yeah.
And I need to be there for that because it is so much fun being around people in the industry, having these conversations with, just day to day. If you're at, having dinner with some friends or whatever, have no clue what this space is. So it really is fun
Yeah.
to have a conversation with people who are so plugged into this space. Um,
Yeah, and I love it because you find stuff out that you know like I'll talk to people multiple times a year in person and this and that, and then it'd be like we're having lunch randomly, and then they drop something, and you're like, how could you have not ever told me that before about what they're doing?
yeah, you should have led with that.
Like that's super useful.
Yeah.
So yeah, definitely the in-person stuff is great, but
Mhm.
it's only good because folks like you come. That's what makes it good, right?
Oh, well, thank you. Because I had great folks who invited me too, for
Yeah.
sure. You really done. I can't overstate it. I really
Well,
do. How much we
you
appreciate
can trust me.
it. No, but my whole team feels the same
Well,
way.
I appreciate it. I appreciate it. I'm lucky. We've had so many great friends in the industry. I had for another project. I was recording a conversation with Charles Mizrahi, who runs prosperity research at this
Mhm.
point. He's been a publisher or editor in the industry for as long as I've been in it. I met him in 2007, 6, 7. Great friend, just great person, great human. Um, and so it's really great. Like we have just a great industry. You have good folks, and it's such an interesting niche, such an interesting business,
Yes.
and so much to talk about because you got markets, you got politics, you got business, you've got
Mhm.
marketing. Like it's endless.
Exactly. And I mean, that just scratches the surface
Yeah.
right there. And the people who've been around it for so long, there is, does seem to be a common mindset of, hey, I might do this space and you do that space, but hey, let me know. I'm a resource. I'm here.
Hmm.
And I love that attitude too.
Yeah. No, it is. It's like there's a very everyone's willing to share. Everyone's just willing to kind of share and be involved, and so that's a really cool aspect of our industry. And we have people coming from other industries, especially people who come from a more corporate environment,
Hmm.
and like the one of the comments that I always get is they're kind of shocked after their first FMS. Like people were just like offering me free information that was useful, and people were offering me relationships to connect with people, like all this stuff. It's very strange.
It's truly unique. It really is. Because in the corporate structure, there's so much competition. And in this
Hmm.
space, if we're helping build an audience and it benefits all of us, it makes the
Yeah.
industry more trustworthy in a space like there is with every space that has bad actors.
Hmm.
If we can keep promoting the good ones, then, rising tide lifts all boats at the end of the
Yeah.
day. And so
Yeah.
trying to hold in that secret sauce, doesn't help here.
Yeah, yeah. And the secret sauces that people think they have are often not secret sauces.
Right. It
Um,
may work right now, but will it
yeah,
work in a bear market?
yeah,
Or will it work in a bull market, or
yeah.
whatever it may be?
And I've had people who really come in like and have said like they'll share all their secrets, quote unquote, and then they're like, well, most people aren't going to use them anyway. It's not
Right.
going to matter.
Yeah. Elon's the best example of that too. Having the open source on so many
Hmm.
patents. Like, hey, if you want to do it, come come
Right.
on. Here it is. Here's how I
Yeah.
did it.
Yeah. Yeah. So this is cool. So I really appreciate you doing this, man. This was great to talk to you.
Mhm.
If anyone wants to connect with you, where should they connect with you?
Absolutely. So, VRA Insider is that funnel page if everybody wants to just see how our marketing goes. And then the more about us page is vraletter.com. So it has a little bit more info about us. There are podcasts and stuff like that. But any questions, feel free to reach out to me personally. My email is tyler@vrainsider.com. Or if you send it to support, I'll see it too. We see them all. So,
Yeah.
like I said, we've got a small lean team here. It's my dad, my brother, my other brother as well, Josh, and my
Awesome.
mom. So, and we've
That's
got a
awesome.
couple other. We got Danielle on client care. So, hey, we're always communicating. And I'd love to be a resource for anybody as well, or just answer some questions. So, again, I can't thank you enough for having
No,
me on
thank you.
today. It's been a blast too. This is a fun
No, I love this too.
conversation.
This is great, man. I appreciate this. I really, really do. Thanks, and we will see you at the next event.
Looking forward to it.